Hello, sex kittens, how are we today? Right, I've put this on the front because I wanted something pretty. And it's vaguely pretty, but it's only a photograph and it's just sold for $4.33 million for a photograph. So, it's pretty and we'll leave it there and move on. To crony capitalism exposed. This, most people in America, I'm sure, will have already picked up on. Sunday night, CBS, 60 Minutes, and Congress and insider trading, and how they're meant to be free from Security and Exchange Commission inquiries because they're Congress critters. But if we read Social Science Research Network and the work of Donna M. Nagy and her paper entitled Insider Trading, Congressional Officials and Duties of Entrustment, we get this article refutes what has become the conventional wisdom that insider trading by members of Congress and legislative staffers is totally legal. So we'll have to do some reading to balance out what is sure to be a public outcry, although a public outcry is a good plan. Rahm Emanuel dumped tons of Freddie Mac stock days before it collapsed, says in a book by Peter Schweitzer entitled Throw Them All Out. Throw them all out, you'll only get new ones, won't make that much difference, but it might send a message. Former White House Chief of Staff Rahm Emanuel is the latest lawmaker to get caught up in allegations of insider trading while a member of Congress. He's meant to have sold about $250,000 worth of Freddie stock just before things went wrong. Could have been a coincidence. Right, more important and to the point is this super committee thing that is going down. I'll read the whole of this. It's quite nicely written. Not so super committee seriously considers becoming a circular firing squad by Stan Collender. A quick note, this story by Robert Pear in today's New York Times about the latest from the Not So Super Committee tells you everything you need to know about the status of the negotiations. According to Pear, one of the main plans for reducing the deficit to the committee apparently is considering is to set up a process by which tax increases would be considered by the House Ways and Means and Senate Finance Committee at some point next year. Does anyone else see how ridiculous this is? The Anything But Super Committee was set up because the regular committees and legislative process could not agree on what to do about the deficit. But rather than make those decisions, the super committee may decide that the best way to deal with the situation is to throw it back to the two tax-writing committees that, because they were unable to come up with a plan in the first place, gave the job to the super committee. And the most inane, stupid, absurd, remarkable thing about this is that the definitely not super committee will claim that this make someone else do the hard work later process complies with the legal requirement to reduce the deficit by $1.2 trillion. Now, whether it should be done, shouldn't be done, it's not being done. Shouldn't this then go crunch and there's great cuts to the armed forces and things like that? Anyway, in the real world of America, cash flow and spending, some municipalities have paid for public projects with funds earmarked for other purposes. Some examples: Miami, Florida, funds spent on streetlights. Sounds all right. Modoc County, California, funds spent on a hospital. Portland, Oregon, funds spent on a building for the foundation that runs the Rose Festival. Course, Michigan, funds spent on city operating expenses. These funds were originally intended for Michigan schools. Portland, Oregon, water and sewer services. California one was roads, schools and other projects, and Miami, Florida's was meant for roads and other transportation projects. The young, these occupy when they're allowed to occupy places, should be kicking up that the people in authority now appear, to me, to be moving towards spending money on now rather than investing in the future. Because they have to now, because they need the money, because they'd promised it then, mainly to themselves. BOFA, Bank of America, mired in billions of mortgage litigation. Bank of America more than tripled its litigation expenses for resolving mortgage problems from, and that'll be Merrill Lynch and Countrywide Financial, that they have in their bowels and are still struggling to digest. Why would anybody have bought Countrywide Financial? It must have surely been forced on them. No sensible management decision would have come up with something so foolish. Right. What these people need, especially the banks, is growth in the world. But the world is now one great big thing, and it's acting like one great big thing. The OECD tries to cover the advanced nations in that one great big thing because they do make up most of the clout still. And that top left graph shows that the slowdown is just moving above the contraction line. It's on its way down, if it continues, into contraction. That line is 100 for the OECD, where it's normally 50 in these leading indicators. And the reason it hasn't gone down through that line into contraction is the United States, which is just hovering above the line at about, 102. Top right, we have China that's gone through the line, Euro area that's gone through the line, and if we go on to 8B, we can see some more individual countries. Top left and moving down the left column, we have Germany down through the line, the United Kingdom down through, Canada is down through, top right, Italy is down through, well down through. Slow down in Brazil, down, well down through in Brazil, and well down it through in India. No growth will cause terrible headaches for people. But out there in the world, individuals are still doing their individuals thing. And if you'd be so kind as to follow me to the bottom of these two charts, we'll work our way up from Spain. What we have is 100, which is, let's call it the average amount of new enterprises being created. In Spain, only 50% of that average is now being created, and that's quite right, because nobody in their right mind would be starting a new enterprise in Spain at the moment. Other countries, USA, UK, Norway and Netherlands, are just below their normal average. In the top chart, we've got Italy, Germany, Finland and Denmark, which are just below their normal averages, creating slightly less enterprises. But the only star player here of new creation of enterprises is Australia, well clear at over 120, creating, let's say, 20% more enterprises than they were doing 5 years ago. Bravo, Australia. And yes, that's the link to go to Australia, and some information out from Westpac, who are Australia's second biggest lender. And they've got their paper out, which shows that it's their books out, isn't it? Shows that well-publicised impact on the retail industry has spread to hotels, the construction industry, and the finance and insurance sectors. Cafes and restaurants have suffered as consumers have closed their wallets and concentrated on paying down debt. Same thing, it's a world, it's going to be doing the same thing at the same time. It's going to hit everyone, along with hotels with which they are bracketed. Food outlets have incurred one of the biggest jumps in percentage terms in the number of impaired loans, because this is from obviously Westpac the bank, and bad debts incurred by Westpac over the 12 months to the end of this year. The figures cover 14 major sectors of the economy, including property, manufacturing and mining. I'll leave it there. No need to go on about China again, but obviously China, Australia, Australia, China, such a fantastically strong link there that it should be said every time. But back in old Europe town, these are the spreads above prevailing, above bunds for France, Italy, Spain, Portugal, Ireland and Greece, before the euro and after the euro. The coloured string flying around in the air before the euro was those countries, flattens out completely after the introduction of the euro, and then something happens to make those strings blow and flap up in the air again. So, and if you go off before 1991, where this chart starts, they were flapping even higher in the air. They always did. So what happened in that 99 to 08 period where somebody's trodden on all the bond spreads? A couple of things. Obviously, lots of things, but two major things. First, Basel. Basel treated all sovereign debt as equal for the amount of capital that you had to back up the debt that you'd bought and put on your books. Second, the ECB, the European Central Bank, when it was doing its repos and its normal financial interactions with banks, treated all the sovereigns as equal. So the banks and everybody, the market, got used to all the sovereigns being equal. It was just pure laziness. They just stopped thinking. And in 2008, they had to start thinking again. And their thinking has created such a storm that the string's flying out into the air again. Okay, this is the EFSF bond spread, and basically what the chart says is the EFSF bond spreads are going out as well. Now, this is the Rescue Bazooka Fund to rescue banks and sovereigns. The $1 trillion, euro, whatever it was meant to be, bazooka thing, looks like it's basically failing. So the politicians have to come up and open their mouths again and come up with new ideas. And in this case it's Schäuble, German finance minister, says it makes sense to activate Europe's ESM bailout mechanism before mid-2013. The EFSF was meant to go to mid-2013 when the ESM was meant to take over. So Schäuble, and I feel sorry for Schäuble because every time he opens his mouth, the situation changes and what he just said sounds ridiculous, so he's got to say something else. So what they're seeing now is the EFSF is failing, so they're going to have to try and drag the ESM forward. Schäuble also said that he wants to change the EU Lisbon Treaty by the end of 2012. In other words, it's a huge project to try and change treaties, but he wants to do it before the end of 2012. Also, Schäuble tells Reuters EU states that don't want to participate in the treaty change should allow the 17-member Eurozone states to proceed. You've got 27 in the EU, but only 17 in the Eurozone area. So 10 outside, and those 10 could veto the changing in treaties that the 17 need to keep the euro currency area together. And Schäuble is saying, please don't do that to us. We need these treaty changes. Next, 13 is unlucky. Angela Merkel, the German Chancellor, called on Monday for Europe to focus once more on building a political union to underpin the euro and emerge from the current financial crisis stronger than before. I was going to read the rest, but I'll just go to the bottom. That does not mean less Europe, it means more Europe, she says. Basically, again, we've seen that they have not at all been able to handle the problems that they had, so they're looking forward to other problems like a federal Europe and changing treaties that'll take 12-18 months to do. So they're closing their eyes to the problems they've got now and setting themselves problems that'll take 12 or 18 months to cure or to sort out. thinking that they've now got a 12 or 18-month window to get on with things. But they haven't, because things that they didn't cure back then are still happening and whirring around. But they think that they, by concentrating on something else that'll take a long time, will make those things go away, and it won't. Right, sanity, to finish this all off, from Paul Krugman. Now, this is prism breaking stuff from Paulie. So, listen up. 2 lots to read to you. From the same article. It's true that all European countries have more generous social benefits, including universal health care and higher government spending, than America does. But the nations now in crisis don't have bigger welfare states than the nations doing well. That's the point he's trying to tell Americans, who are now probably pointing out that, well, Europe's in trouble because they've got all these fanny socialist systems in place, blowing themselves up. Okay. Paulie's trying to say it's not as easy as that. But the nations now in crisis don't have bigger welfare states than the nations doing well. If anything, the correlations run the other way. Sweden, with its famously high benefits, is a star performer, one of the few countries whose GDP is now higher than it was before the crisis. Meanwhile, before the crisis, social expenditure, spending on welfare state programs, was lower as a percentage of national income in all of the nations now in trouble, Greece, Portugal, Ireland, Spain, Italy, than in Germany, let alone Sweden. Do you get the idea? It isn't necessarily socialist programs and all that sort of stuff that has caused the problems for the nations that are in trouble. Not necessarily. Right. Last little paragraph. It's quite interesting. What has happened, it turns out, is that by going on the euro, Spain and Italy in effect reduced themselves to the status of third world countries that have to borrow in someone else's currency, with all the loss of flexibility that that implies. In particular, since euro area countries can't print money even in an emergency, they're subject to funding disruptions in a way that nations that kept their own currencies aren't. And the result is what you see right now in Europe. America, which borrows in dollars, does not have that problem and has the Fed to print up money to solve the problems of 2008 as best they could. And they have done so the best they could. But in Eurozone, they can't. So, what do you want to do in America? Do you want to abolish the Fed? Do you want to say we won't have social programs because that gets you into trouble? Nothing is as easy as headlines in mainstream media seem to want to say that they are. Life is jolly complicated. But that is almost MMT by Paulie Krugman there. Bye.